Okay, thank you. Thank you for the invitation again. So, let me briefly go over what economic environment look like for 2020. Last 2 months of the 2024 and 2025. We expect the global economy to grow 3.2% next year, so which is going to be resilient, not a hard landing scenario. It's going to be more soft landing case because U.S. has so many bullets to fight against the recession. Like the current the base rate is 5%, and they can lower the interest rate to fight back against the recession. So we think and U.S. economy has been showing pretty resilient growth so far, so we do not believe the U.S. will go to the a recession next year. So as long as the U.S. is supporting their own economy, and Europe has seen already a slowdown in 2024, but the ECB already started cutting the interest rate, and that is going to support the Europe area's growth next year. So we expect the U.S. and Europe is going to be resilient 2025. I think the trouble has been that China has been driving the global growth, but it has been pretty slow for last couple of years, and especially this year they are not going to grow more than 5%. So we expect them to grow around 4.8%, but that is going to be a big challenge. I think China has been introducing the multi and fiscal policy to meet the 4.8% growth for this year. So we will see how the recent China's kind of announcement of the fiscal spending is going to support their growth for 2024 and toward 2025. So it's going to be fiscal and multi-policy tool need to be really effective to sustain the China's growth. So we think there is some concern about the China's growth for 2025. For Korea, we expect Korea to grow around 2.5% for this year, but that can be a bit optimistic because our Q3 GDP was released last week, and it was far below than the market survey and the market expectation. They grow only 0.1% quarter-on-quarter. So probably Korea will be grow around 2.4 or 2.3% in 2024. But the next year, we expect them to grow. Actually, a slowdown of the 2024 is not going to trickle down to 2025's slowdown. It's more maybe drive up the 2025 growth with a kind of base effect of the slow growth in 2024. The reason is Korea just to see the bottom of the business cycle. So we still think Korea is on rising business cycle than the declining business cycle for 2025. So let's see the external environment the Korea is facing. I think globally, there has been monetary tightening by the Fed and ECB and even the Bank of Korea has been tightening the monetary policy for last 2 years. We see some impact of the tight monetary policy. So we see the business lending has been declining because the current interest is a bit too high, and also a bit of the high interest rate is holding down the inflation, which means a demand is depressed under the a bit of the high the interest rate. And also, you can see the inflation in U.S. has been slowing down quite rapidly. But in the meantime, the default rate by the corporate and the private has been actually increasing quite rapidly. So you can see the graph over here. So that is also kind of a sign for the Fed need to ease the monetary policy. In other words, cutting the interest rate to support the economy. And also, we see the U.S. labor market has been showing some signs of slowing down. I think there was a bit of, up and down in U.S. labor market. Like the U.S. labor market was very strong in September. So the people think, it's too early to cutting the rate, and probably was a mistake to cut the rate because the U.S. Labor market is actually too strong. But if you see the trend-wise, the job market is slowing down. Even though it is resilient, toward the 2025, it's going to slow down. So for the U.S., the Fed perspective, they need to cut the rate anyway, but the matter is going to be how fast they're going to cut their interest rate. Also, it's not just the Fed, also ECB and BOJ, they all kind of tighten the monetary policy, and then they start to easing like you can see the graph-wise. So this is a kind of pivot for the central bank to changing their monetary policy toward 2024, and we expect them to continue to easing the monetary policy in 2025. So I think that is going to be a bit better environment for the corporate side to do business, because it's a more friendly environment to do business under the slowing the interest rate. The key trouble for the economy is going to be the geopolitics. Like we already know, there has been the conflict in the Middle East and a conflict in Ukraine and Russia, and I think the Ukraine-Russia war is getting kind of heading to the end of the war probably. Like I think, also like Israel and the Hamas and the Iran is also kind of reached the peak of the escalation. Hopefully it will come down in 2025. I think that all expectation has related to the U.S. election. So if the Trump is elected, like the market is already pricing what if Trump wins, and even though the popularity of the Harris is a bit higher, when we comes to like the electric vote, the Trump seems to have a higher possibility, and the market is pricing it. So if that happens, that is going to be a bit of the change the global shape of the economy. So I think 2025 is going to be, we go back to 2016 when the Trump was elected for the first time. So I think geopolitics and US election and Trump's second term is going to be the key theme for 2025 economy. So if the Trump is elected, it's likely the trade war is going to start again. Like that is going to be not a good news to the China economy. I think China economy may suffer more with the Trump election, and I think that on that context, there is a rising concern to Korea too. What if the China is impacted by the U.S. and how China slowdown is going to impact the Korea's export to China? Because China still takes around like 20% of Korea's export. It used to be 25%. It came down to around 20%, but still China is the largest Korea's like export partner. So I think China slowdown is not going to be positive news to Korea. So I think there is a rising concern in global trade in 2025. And also, like we see the China economy has showing really negative growth for almost like the last 2 years. This is if it's here, that is they are meeting their GDP potential, and as you can see, since 2020 in the fourth quarter, China economy has not meeting their potential growth. So you may see like unemployment rate in a young generation in China is really high, and official data is saying above like a mid 10%, but actually the sentiment-wise, like the China job market unemployment rate for the young generation is over 20%. So, China's kind of the economy seems quite slow. That is going to be a concern. For China to rebound, it's like Korea. China need to rebound in a real estate market. Housing sector need to rebound to support the China economy. But we do not see any kind of still sign of the real estate market is recovering. I think to do so, more or less like a central government need to support it. And so far, we haven't. There has been some announcement. We haven't seen the real the policy to support it. So we are probably still waiting for it. Or if the interest is coming down, that will provide more opportunity for real estates to develop. So that is going to be solve the problem a bit under the declining the interest rate. Also, because of the declining kind of real estate price, that is actually depressing the sentiment of the consumer. So you can see the consumer sentiment has been below their long-term trend. So which means the consumer spending has been very slow in China. So with under the severe tariff, if the Trump is elected, then China need to grow domestically. To do so, they need a strong domestic consumption. But as you can see in the graph, domestic consumption is very weak in China now. And the job market, as I said, is not really strong. So that is going to be a biggest concern for the China economy, probably for next 4 or 5 years. And also the China's equity market has been stock market has been kind of slowing down. So that is actually reduced the wealth effect of the Chinese people. So probably there is another reason for the spending is slowing down in China. So China government has been easing the monetary policy. So you can see that this is a debt to GDP ratio is rising. So in other words, the Chinese government is pumping a lot of money into the market to support the economy. So, but still, China economy is not rebounding. So there is some concern. What if China is falling into liquidity trap? So we heard a lot from the Japan's case. So the question is whether China is going to be the second Japan. I mean, whether the China is going to suffer kind of liquidity trap, even though a lot of liquidity is not reviving the economy. So I think because of the 1980s, when there is some tariff war between the U.S. and Japan, I think that was the main reason Japan's kind of slowing economy for last 30 years. So what if that is also applied to China, with the U.S. sanction on China? What if that caused a China slowdown for next decade? That is going to be the key concern after the for Trump win the election. So PBOC, the central bank in China, is also providing a lot of liquidity, but as I say, that is not actually helping the a China economy rebound. So we published the report recently. We say we need a two to tango. So which means we need a fiscal and monetary policy to support the economy. So the Chinese government need to actually spend it. So they have to support the real estate market, or they have to give the money to consumers to drive up the consumption. So a couple of days ago, Chinese government announced $1.4 trillion of the $1.4 trillion US dollar kind of this fiscal plan to support the real estate market and also to support the consumption. I think that is going to be the first step to drive the China's economy. And if it's so, we think China economy will rebound. So, but still, we need some more proactive support from the government for China economy to rebound. So, I think the concern for China is going to be ongoing problem. So, coming back to Korea, we expected Korea 2.5. I think, as I said, that this seems a bit ambitious. I think it may slow down to 2.2, 2.3 or 2.4. But we still think Korea will grow 2.0, or if it coming down 2.3 or 4, it will rise up to a 2.1, I think. As you can see in the right-hand side graph, cyclically, Korea is bottoming and on rise, and this is the negative trend. So still like a bit of room for the cycle-wise to grow. This is the I use the HP filter to see whether Korea achieved the potential GDP or did not achieve the potential GDP. As you can see, Korea has been underperforming of our potential GDP. So, one quarter was improvement and then came down, and this quarter was also like coming down. So, for last like 7 or 8 quarters, like Korea has been below our potential GDP, and as I say, like there is Korea economy has been showing very cyclical behavior because Korea's economy is supported by the IT, which is very cyclical, and also Korea's like a construction sector is a big factor for the Korea's growth, and that is also showing very cyclical behavior. So when we look at the cyclical behavior, Korea is saw some bottom of the last year and showing some sign of rebounding. So 2025 is going to be recovering year than the like a falling below the potential GDP. So what if some people is asking me, what if it's L-shaped rebound? Instead of rebounding it, what if it is going to be double dip? So that is also a question and challenge for Korea's growth. But U.S. economy is still okay, and China is, not doing well, but they supporting through the fiscal and monetary policy, and if that is more kind of, they have room to grow for the China too. So I do not think like a kind of L-shaped or double dip kind of the growth scenario is going to be the case for Korea. To do so, I think Korea need to grow in private consumption and domestic market, because government has been sometimes like a big factor, but in under the like a more tight fiscal policy, so that is going to be limited. So like, for Korea to grow, it's going to be the domestic market and government support, because as you can see, government support has been actually very kind of increased a little bit, but there has been slower than the previous government when you see the like a higher government spending. So as you can see in the right-hand side graph, like this is some growth factors. This is a current Korea's growth contribution to GDP growth. You can see most of the sectors are very small and compared to the like previous years. So in one word, Korea economy is not as dynamic as before, or like a Korea economy is getting pretty mature. So I think Korea economy is not going to be interesting, but I would not think like it will go like below its potential GDP seriously and hurting the economic slowdown either. So it's going to be a bit boring economy, but that is sometimes like a boring economy has advantage of sustainability. In labor economic perspective, there has been some sign of the productivity growth increase here, but if you look at the trend-wise, like the productivity has been falling down. By the end of because Korea's population is declining, we need a huge labor productivity to sustain the growth, because at the end of the day, economic growth is the same as productivity growth. But the productivity growth has been slowing down. That is going to be the concern. And for the productivity to pick up, I think AI innovation is going to be a bit helpful for Korea, because Korea is also one country who can be benefit from the AI innovation. So that is going to be kind of a bit of a better prospect. But I mean, trend-wise has been falling down, not a positive sign for Korea economy. Export is, as you see, picking up but sustain this way. I mean, the concern is what if it goes down, or will sustain for a long time, or like it can pick it up one more time. But I think trend-wise, it's going to be hard to pick it up from here. So export growth for next year is going to be slower than for this year. And as you can see in the right-hand side, Korea's export, every economy shows some slowing down. So next year, for Korea to grow, is going to be a domestic market, and probably government or Bank of Korea probably have to cut the rate, or government have to increase its fiscal spending to support the economy. Otherwise, I think it's going to be a tough year ahead. It's quite hard to predict Korea's economy because I see the data is very mixed. Some data is good, some data is bad. So hard to tell which data I can trust. So I think production is good and retail service is bad. When the production pick it up and service is coming down, so it is. I mean, two need to move together to see some signs of improvement, but I haven't seen it yet. So I think mixed economic performance is making hard to have a confidence in Korea's economy. So as you can see, there was a bit of sign of the rebounding of the sentiment, and is coming down again. So the sentiment-wise, it's not that really positive for Korea's growth. Job market has been pretty okay, growing, but the number of jobs is declining. Is a bit of up, but this trend-wise is coming down. So which is not a positive. And also the wage is coming down. So usually when the job market is tight, then wage need to rise because there is more demand for the labor. But I think employment is increasing, but the wage is not the wage growth is not increasing. So which is a bit mixed signal. So probably most of the jobs Korea is creating now is not high-paying jobs. Probably more part-time jobs or more the jobs created the most for Korea was over 60 female, and service sector jobs. So it's not a really healthy jobs, more kind of like a service kind of. So more or less like a 60-something is supporting 70-something generations for taking care of their health. So which is not a positive sign of the sign of the jobs. Inflation is coming down. So which is a positive sign, and the expected inflation is coming down, which is a positive sign. But in other words, the inflation is coming down because people do not expect the economy is going to be strong. So if the economy is going to be expanding and strong, then people tend to expect the inflation is going to rise. So people expect the inflation is coming down, which is positive, but at the same time, it's not all positive sign to Korea's economy because inflation need to be maintained around 2%. If inflation is coming down below 2%, people tend to think, why do I have to spend today? Because tomorrow, that product can be cheaper than today. Then people delay spending. So people need to have, the price may go up. So if I don't buy today, the product price will be higher tomorrow. Then people spend it. So we need some sustainable inflation to drive up the growth, but the inflation is falling, but falling too fast is not going to be all that positive. The market is expecting the Bank of Korea. This is the expectation of the rate cuts. So how many times the Bank of Korea is going to cut the interest rate, and how Fed is going to cut the interest rate. You can see like we expect far less expected rate cut than the Fed. Probably because Fed has risen their interest rate from the 0.5 to 5.5. We raised 0.5 to 3.5. So we didn't raise the interest rate as much as the Fed. So when we cut it, we are going to cut less than the Fed, but still our expectation of the rate cut is far less than the Fed. I think one of the reasons is the Bank of Korea has been saying they are reluctant to cut the interest rate. I think they are concerned with they are concerned with the rising household debt and also rising the apartment price in certain Seoul area. So I think that is kind of holding up the Bank of Korea to cut their interest, unlike the Fed. And also, the BOK has been saying, from here that this is a BOK's pulse rate, and this is the market interest rate. The market interest rate has been falling even without the BOK's rate cut. So for BOK's perspective, this is a bit strange because the BOK didn't cut the interest rate. The market is price cutting the interest rate because the market think BOK is going to cut interest rate eventually, so they are pricing the rate cut already. So even though BOK cut the rate last October, the market rate actually rising on rise for now. So which is a bit weird. So that's why probably BOK says we need to cut the rate further. Then I think the market will accept a BOK's pulse direction, and the market interest will falling down. So always the central bank can only control short-term interest rate. Mid to long-term interest rate is decided by the market, but the market is more affected by the economic environment. And right now, the market expects Trump win, and if Trump win, the inflation will come back, and they trying to kind of have a higher interest rates, which is not actually not going opposite direction of the central bank is sending the message for now. When we look at the Korea's FX market, China has been actually quite turned around this year, and also semiconductor has been turned around this year. But the Korean won, which started around 1280 level, rose up to close to 1400. I mean, it came down to around 1310, and then it rose again to 1380. So Korea won is not getting any benefit of the semiconductor rebound or China rebound at all. So there is the question has been. I got a lot of requests from the out of Korea why Korea won is performing poorly compared to Indonesia or Thailand. So compared to the other EM currencies, the Korean won is not doing well. So that is going to be a concern. So as you can see, this is the Korea Thai baht, and this is the Korea won. The Thai baht has been appreciating quite rapidly, but Korea won is not performing as well as the Thai baht. But seems like the Korea economy is more matured, more resilient than Thai. But the Korea won is not doing as well as Thai. So there has been a lot of question by the foreign request. I think the biggest reason is that Korea has around 80 billion current account surplus, which means we are making money out of Korea around 80 billion. Out of 80 billion, Korean firms are spending around 20 or 30, depending on the economy, depending on the year, to invest out of Korea, like a Samsung Electronics building, the semiconductor industry in US. And that is around 20 to 30. And MPS is buying foreign equity around 20 to 30, so which is adding up around 50 to 60. And Korean retailers has been buying around 10 to 20 billion dollars of the foreign equity purchase. So that is around 70 or 80. And then they're adding up to FIs and then Korean insurance buying the foreign equity. That is another 20. So it's adding up to 90. So Korea is having a current account surplus of 80. But while the Koreans are spending around 90 to buy the foreign equity and foreign investment. So we need a more strong inflow to sustain the Korea's like a Korea won level. So Korea won, in old days, we have a more stronger current account surplus. So even though we buy the foreign equity, we have left over. So Korea won tend to appreciate around 1,200 level. So economy is good and usually converging below 1,100. But now I think under this kind of the dollar supply and demand, Korea won tend to stand around 1,300. So if there is a bit of a more outflow, Korea won is approaching to 1,400, depending on the month. So I think more or less like the dollar supply and demand is going to be a bigger impact factor for Korea's won performance. So I think that's why Korea won is performing worse than the Thai baht, because there is too much outflow from the Korea. So I think going forward, like driving up the foreign inflow is going to be the key. I think that's why government has been working really hard to pass Korea to be included in WGBI, and also like there will be effort to drive the Korea become a developed market in MSCI. I think that all, and also like a government's value up program for foreigners to invest in Korean equity, that is going to be the key for Korea won's like a stability. So even under the U.S. rate cut cycle next year, Korea won may not perform as good as we expect, depending on the flow equity, the Koreans outflow like a performance. So I think in summary, Korea economy is not going to be actually that interesting. I think we'll have a bit of a challenge, and also like there will be a challenge for Korea. But I do not think Korea will have a kind of severe recession type of the hit in 2025. So I will stop here and have a good meetings. Thank you.